We're live from New Delhi. You're watching DD India NewsHour, India's voice to the world. I'm Lipakshi Khurana. Coming up in the next hour. India's free trade deal with European Free Trade Association effective from today. Deal signed last year promises $100 billion investment over 15 years, projected to create 1 million jobs in India. US government begins a shutdown in most operations after Congress fails to advance funding bill. Trump earlier warned Democrats of irreversible actions.
They are shutting it down. We're not shutting it down. We don't want it to shut down because we have the greatest period of time ever.
In Philippines, at least 69 people killed, over 150 injured in a powerful 6.9 magnitude earthquake. Search and rescue operation underway amid power outages and damaged buildings. And India kicks off their Women's World Cup campaign with a 59-run victory over Sri Lanka in a rain-shortened match in Guwahati. And on to the details now. Today marks a new chapter in India's diplomacy. The much-awaited free trade agreement between India and the four-nation European bloc EFTA has come into force. The deal signed last year promises major investment, job creation and greater market access. Our correspondent Akhilesh Suman has more details on this.
The Trade and Economic Partnership Agreement, TIPA, with the European Free Trade Associations is a landmark in India's global outreach. Signed on March 10, 2024, it comes into effect after 16 years and 21 rounds of negotiations. At its core is US $100 billion investment pledge over 15 years, projected to create over 1 million jobs in India. The pact opens new opportunities for Indian farmer, gems and jewelry, textiles, machinery, and IT services.
Trade and Economic Partnership Agreement with the EFTA countries is a comprehensive agreement which covers not just trade in goods and services, but also intellectual property rights, competition, and also government procurement. EFTA countries are important trade and economic partners of India. They had invested about 12 billion in the Indian market, and Norway's pension fund also separately invested about 25 billion in the Indian market. Since these countries are also very much part of the European Economic Area. So overall, this is an important agreement for both for the European countries and also for India.
To safeguard domestic interests, India has kept dairy, farm products and gold outside the purview of this agreement. But Indian exporters will gain new tariff advantages in EFTA markets.
Out of these four countries, Switzerland, Iceland, Liechtenstein and Norway, Switzerland is the biggest trading partner to India among those four, and I think it will definitely benefit Indians and the Swiss because it will ease imports of certain goods. In general, I think this agreement is probably, especially if you look at the other free trade agreement with the European Union, it's of psychological importance because it's good that these four countries now managed to make a deal because we all know that for a very long time India and the EU were not able to come to a conclusion.
The agreement is also historic. It includes a sustainability clause, binding both sides to uphold labor rights and environmental standards. Bilateral trade is now projected to rise to US $55 to 60 billion annually. With new tariff schedules in place, ports and airports are fast-tracking consignments, giving exporters an early edge under the new regime.
The implementation of free trade agreement between India and four European nations, Norway, Switzerland, Iceland and Liechtenstein, sets a template how cooperation can be established between countries who think alike and set the ball rolling for other countries too. It can be a model for cooperation. Akhilesh Suman for DD India in Delhi.
Well, the U.S. government has now shut down as senators have failed to pass a last-minute funding bill. The 55 to 45 vote in the Senate falling short of the 60 votes needed to advance the legislation ensured that government agencies discontinue all but essential activities such as law enforcement. Now, this is America's 15th government shutdown since 1981. However, it is unclear how long Democrats will maintain their untenable posture, making the duration of the shutdown difficult to predict. Regardless, the employees should report to work for their next regularly scheduled tour of duty to undertake orderly shutdown activities. And earlier, President Trump termed the shutdown as inevitable, threatening mass, irreversible and in fact, let's now take you live first across to Mumbai, where Reserve Bank of India Governor is announcing the decision of the Monetary Policy Committee meeting.
For central banks as they navigate the shifting growth-inflation dynamics. Financial markets have been volatile. The US dollar strengthened after the upward revision of US growth numbers for the second quarter. Treasury yields hardened recently as expectation of rate cuts by the Federal Reserve ebbed. Equities have remained buoyant across several advanced and emerging economies. I now come to the decision of the Monetary Policy Committee. The Monetary Policy Committee met on the 29th and 30th of last month and today to deliberate and decide on the policy repo rate. After a detailed assessment of the evolving macroeconomic conditions and the outlook, the MPC voted unanimously to keep the policy repo rate unchanged at 5.5%. Consequently, the STF rate remains at 5.25%, while the MSF rate and the bank rate remain at 5.75%. The MPC also decided to continue with a neutral stance. I shall now briefly set out the rationale for these decisions. The MPC observed that the overall inflation outlook has turned even more benign in the last few months due to a sharp decline in food prices and the rationalization of GST rates. The average headline inflation for this year has been consequently revised lower from 3.7%, which was projected in June, 3.1% in August, to now 2.6%. Headline inflation for Q4 this year and Q1 next year too have been revised downwards and are broadly aligned with the target despite unfavorable base effects. Core inflation for the year and Q1 next year is also expected to remain contained. The MPC also noted that growth outlook remains resilient, supported by domestic drivers, despite weak demand. It is likely to get further support from a favorable monsoon, lower inflation, monetary easing, and the salubrious impact of the recent GST reforms. However, growth continues to be below our aspirations. Even though the growth projection for the current financial year is now being revised upwards, the forward-looking projections for Q3 and beyond are expected to be slightly lower than projected earlier. This is primarily due to trade-related headwinds, despite being partially offset by the impetus provided by the recent GST reforms. Summarizing, the MPC concluded that there has been a significant moderation in inflation. Moreover, the prevailing global uncertainties and tariff-related developments are likely to decelerate growth in H2 this year and beyond, the current macroeconomic conditions and the outlook has opened up policy space for further supporting growth. However, the MPC noted that the impact of the front-loaded monetary policy actions and the recent fiscal measures is still playing out. The trade-related uncertainties are also unfolding. The MPC therefore considered it prudent to wait for the impact of policy actions to play out and for greater clarity to emerge before charting the next course of action. Accordingly, the MPC unanimously voted to keep the policy repo rate unchanged at 5.5% and also decided to retain the stance at neutral. I will now be dwelling in some detail about our assessment of growth and inflation which has gone into these MPC decisions. First of all, growth. Economic activity has remained resilient, with growth of real GDP surprising on the upside at 7.8% and GVA at 7.6% for Q1 this year. As suggested by high-frequency indicators available so far, domestic economic activity continues to sustain momentum even in Q2. Looking ahead, an above normal monsoon, good progress of Kharif sowing, and adequate reservoir levels have further strengthened prospects of agriculture and rural demand. Buoyancy in services sector coupled with steady employment conditions are supportive of demand. This is expected to get a further boost from the rationalization of GST. Rising capacity utilization, conducive financial conditions, and improving domestic demand should continue to facilitate fixed investment. However, ongoing tariff and trade policy uncertainties will impact external demand, prolonged geopolitical tensions, and volatility in international financial markets caused by risk of sentiments of investors pose downside risks to the growth outlook. The implementation of several growth-inducing structural reforms, many of which were announced by the Honorable PM on 15th August, including the streamlining of GST, are expected to offset some of the adverse effects of the external headwinds. Taking all these factors into account, real GDP growth for this year is now projected at 6.8%. This is a revision from our earlier forecast of 6.5%. Q2 now is projected at 7%, Q3 at 6.4%, Q4 at 6.2%. Real GDP growth for Q1 next year is projected at 6.4%. The risks are evenly balanced. I will now come to inflation. Inflation conditions remained benign during 25-26 so far, with actual outcomes turning out to be significantly lower than our projections. Low inflation is primarily attributed to a sharp fall in food inflation, aided by improved supply prospects and measures taken by the government to effectively manage the supply chain. Core inflation remained largely contained, with the August reading at 4.2%. This is despite continued price pressures on precious metals like gold and silver. Turning to the inflation outlook, the progress of the southwest monsoon has been satisfactory. Healthy Kharif sowing, adequate reservoir levels, and comfortable buffer stocks of food grains should keep food prices benign. The recently implemented GST rate rationalization would also lead to a reduction in prices of several items in the CPI basket. Overall, the inflation outcome is likely to be softer than what was projected in August, primarily on account of the GST rate cuts and benign food prices. Considering all these factors, CPI inflation for this year is now projected at 2.6%, with Q2 and Q3 at 1.8%, Q4 at 4%, and Q1 next year at 4.5%. The risks are evenly balanced. I will now dwell on India's external sector position. India's current account deficit moderated in Q1 this year to $2.4 billion or 0.2% of GDP. This is in comparison to $8.6 billion or 0.9% of GDP same period last year, on account of an increased net services surplus and strong remittance receipts despite higher merchandise trade deficit. During July and August 2025, for which we have data till now, merchandise trade deficit continued to remain elevated, notwithstanding rising global trade uncertainties. India's services exports, driven by software and business services, witnessed robust growth in the last 2 months, July and August. Furthermore, robust services exports coupled with strong remittance receipts is expected to keep the current account deficit sustainable during this year. On the external financing side, net FDI reached a 38-month high in July this year, driven by increased gross FDI and a moderation in repatriation and outward FDI. Net FPI, however, recorded outflows of $3.9 billion this year so far. We have data till September 29. This is on account of both equity and debt segment outflows. As on September 26 this year, India's foreign exchange reserves stood at a healthy $700.2 billion, sufficient to cover more than 11 months of our merchandise imports. Overall, India's external sector continues to be resilient, and we remain confident of meeting our external obligations comfortably. Notwithstanding the robust domestic macroeconomic fundamentals, the rupee has witnessed some depreciation accompanied by phases of volatility. We are keeping a close watch on the movements of the rupee and will take appropriate steps as warranted. I'll now be covering the liquidity and financial market conditions in the country. System liquidity, as measured by the net position under the LAF, stood at an average daily surplus of 2.1 lakh crore rupees since the last MPC meeting in August. Going ahead, the drawing down of government cash balance and the remaining 75 basis points cut in the CRR, which was announced earlier, in the remaining period of October and November, will aid the banking system liquidity in the near term. Through our two-way operations, we will actively manage liquidity to anchor the short-term rates. Money market rates have been relatively stable amidst comfortable liquidity conditions. During this easing cycle from February till August, for which we have data till now, in response to this 100 basis points cut in the policy repo rate, the weighted average lending rate of scheduled commercial banks moderated by 58 basis points for fresh rupee loans. 71 basis points is on account of the interest rate effect. The moderation for outstanding rupee loans is to the extent of 55 basis points. Similarly, on the deposit side, the weighted average domestic term deposit rate on fresh deposits declined by 106 basis points against the 100 basis points cut, while that on the outstanding deposits softened by 22 basis points over the same period. Transmission of this monetary policy has been broad-based across sectors. Going forward, adequate liquidity in the system and the remaining CRR cuts will further facilitate monetary transmission. I now give my statement on financial stability in the country. The system-level financial parameters related to capital adequacy, liquidity, asset quality, and profitability of the scheduled commercial banks continue to remain healthy. Similarly, the system-level parameters of the NBFCs too are sound, with adequate capital and improved GNPA ratios. Bank credit growth, despite being lower than last year, continues to be healthy and supportive of real economic activity. I would like to emphasize here that as other sources of funding are gradually but steadily increasing their footprint, it is the overall flow of financial resources to the economy that is more pertinent for assessing flow of funds to the productive sectors of the economy. The total flow of resources from non-bank sources to the commercial sector increased by 2.66 lakh crore this year so far, more than offsetting the decline in the non-food bank credit of about 48,000 crore rupees. I shall now come to the additional measures. I have 22 additional measures aimed at, number one, strengthening the resilience and competitiveness of the banking sector. 2, improving the flow of credit. 3, promoting ease of doing business. 4, simplifying foreign exchange management. 5, enhancing consumer satisfaction. And lastly, internationalization of the Indian rupee. First of all, I have a few measures for strengthening the resilience and competitiveness of the Indian banks. The ECL framework, the expected credit line framework of provisioning with prudential floors, is proposed to be made applicable to all scheduled commercial banks and all India financial institutions. You would recall earlier a discussion paper in this regard was issued. We propose to make these effective from 1st April 2027, therefore giving sufficient time to the regulated entities. Moreover, there will be a glide path till 2031, so effectively 5 years. This is to smoothen the one-time impact of higher provisioning, if any, on the existing books of some of the banks. Furthermore, it is proposed to make the revised Basel III capital adequacy norms effective for commercial banks again from 1st April 2027. In furtherance of this, a draft of the standardized approach for credit risk shall be issued shortly. Under the revised approach, the proposed lower risk weights on certain segments are expected to reduce the overall capital requirements, particularly for MSMEs and residential real estate, including home loans. It may be recalled that capital requirements for operational risk have already been finalized in 2023, whereas the capital requirements for market risk under Pillar 1 of the Basel III guidelines are under finalization after receipt of comments from the public. All these measures, we propose to make them effective from 1st April 2027. These measures will help align our guidelines with international standards adapted to our national conditions and priorities, and strengthen the capital adequacy framework for the banks and the all India financial institutions. 3. A draft circular on forms of business and prudential regulation for investment was issued in October last year. It has now been finalized after wide public consultations, and it will be issued shortly. The proposed regulatory restriction on overlap in the businesses undertaken by a bank and its group entities is being removed from the final guidelines. The strategic allocation of business streams among various group entities of a bank will be left to the wisdom of the bank boards. It is further proposed, this is my fourth proposal in this regard, to introduce risk-based deposit insurance premium. You are aware that today we are having a flat rate of premium for all banks, irrespective of size, irrespective of risk, at 12 paisa per 100 rupees of net deposits. We propose to bring in risk-based insurance premium. This will incentivize sound risk management by banks and reduce the premium to be paid by the better rated banks. I will now announce 5 measures to improve the flow of credit to the real economy. 1. To expand the scope of capital market lending by banks, it is proposed to provide an enabling framework for Indian banks to finance acquisition by Indian corporates. Some of the acquisition finance related to infrastructure companies is already available, already provided. We propose to now expand it. 2. It is proposed to A. remove the regulatory ceiling on lending against listed debt securities, and B. enhance limits for lending by banks against shares from rupees 20 lakh to rupees 1 crore per person, and for IPO financing from rupees 10 lakh to 25 lakh rupees per person. These had not been revised for some time. 3. It is proposed to withdraw the framework introduced in 2016 that disincentivized lending by banks to specified borrowers, those borrowers which had credit limits from the banking system on the whole of rupees 10,000 crore and above. While the large exposure framework since put in place for the banks addresses credit concentration risk to a particular entity or group at an individual bank level, concentration risk at the banking system level, as and when considered necessary, will be managed through specific macroprudential tools. 4. To reduce the cost of infrastructure financing by NBFCs, it is proposed to reduce the risk weights applicable to lending by NBFCs to operational, high-quality infrastructure projects. This should give a boost to funding for infrastructure in the country. 5. Since 2004, about 20 years ago, licensing for UCBs, the urban cooperative banks, had been paused. No license has been given thereafter. Considering the positive developments in the sector, including legislative amendments in the Banking Regulation Act during the last 2 decades, and in response to the growing demand from the stakeholders, we propose to publish a discussion paper on licensing of new UCBs. I now come to measures related to ease of doing business, and we have been taking a number of measures over the recent few months and even earlier. I have 7 announcements to make, including those related to FEMA. First, a large number of circulars and directions totaling about 9,000 have been consolidated. I had earlier announced in this regard, and we have consolidated them subject-wise across 11 different types of regulated entities. Drafts of the same are ready, and they shall be issued shortly for public consultation. They should certainly aid simplification. Second, it is proposed to provide greater flexibility to banks for opening and maintaining transaction accounts of borrowers, that is, current accounts, CC and OD accounts. This will particularly help borrowers which are regulated by a financial sector, for example, the NBFCs. Restrictions with regard to collection accounts are also proposed to be withdrawn. The export sector is a vital part of India's economy. To further strengthen the sector and enhance ease of doing business for them, we shall A, extend the time period for repatriation from foreign currency accounts of Indian exporters in ISSF from 1 month to 3 months. B, increase the period for forex outlay for merchanting trade transactions from 4 months to 6 months. And C, simplify the process of reconciliation of outstanding entries related to exports and imports in the respective reporting portals, the EDPMD and the IDPMS. Sixth, and these relate to FEMA, again, key provisions relating to eligible borrowers, recognized lenders, limits on borrowing, cost of borrowing, end use and reporting, etc. in the ECB regulations issued under FEMA are proposed to be rationalized. Seventh, it is proposed to rationalize FEMA regulations regarding non-residents establishing their business presence in India. I shall now state 3 consumer-centric proposals. 1, the bouquet of services offered to BSBD account holders, basic savings bank deposit account holders, without a levy of minimum balance charges, is proposed to be expanded to inter alia include digital banking, that is, mobile and internet banking services. 2, the internal ombudsman mechanism is proposed to be strengthened to make grievance redressal by the regulated entities themselves more effective. 3, the RBI ombudsman scheme is also being revised for improved grievance redressal, and at the same time we are also including the rural cooperative banks under the ambit of this scheme. Now I have 3 proposals for internationalization of the Indian rupee. We have been making steady progress in this regard. The first proposal relates to permit 80 banks to lend in Indian rupees to non-residents from 3 countries, Bhutan, Nepal, and Sri Lanka, for cross-border trade transactions. Second, to establish transparent reference rates for currencies of India's major trading partners to facilitate rupee-based transactions. And third, permit wider use of SRVA balances by making them eligible for investments in corporate bonds and commercial papers also. Let me now conclude. Despite an external environment that has deteriorated since the August policy, the Indian economy remains poised to register high growth. The sobering of inflation has given greater leeway for monetary policy to support growth, while compromising on the primary mandate of price stability. However, the MPC decided to wait for the cumulative impact of the recent policy actions to play out before charting the next course of action as India strives towards achieving Viksit Bharat by the centenary year of its independence. It would need the coordinated support of fiscal, monetary, regulatory, and other public policies to attain its goal. The recent rationalization of GST rates by the government is a major step in this direction. In terms of monetary policy actions, we will remain vigilant of the incoming data and stay focused on our objective of maintaining price stability while supporting growth. The various policy announcements today that we have mentioned will also support the achievement of the goal of Viksit Bharat. And in pursuit of this objective, we will be proactive, objective, and consistent in our communication while backing it up with credible actions. Thank you, Namaskar, and Jai Hind.
All right, you were watching live from Mumbai, where Reserve Bank of India Governor announced the decisions of the Monetary Policy Committee meeting. Well, the RBI Governor, Sanjay Malhotra-led Monetary Policy Committee said that since August policy meeting, significant developments on the domestic front amidst a fast-changing global economic landscape have altered the narrative on growth. Also, the repo rate was kept unchanged at 5.5% and maintained the policy stance as neutral. RBI Governor said that after a detailed assessment of the evolving macroeconomic conditions and outlook, the MPC voted unanimously to keep the policy repo rate unchanged at 5.5%. Well, this would mark the second consecutive pause following a cumulative 100 basis point rate cut earlier in the year. And he also said the rationalization of the GST is likely to have a sobering impact on the inflation, while at the same time stimulating consumption and growth. RBI Governor said that the MPC observed that the overall inflation outlook has turned even more benign in the last few months due to a sharp decline in the food prices and the rationalization of GST rates. Average headline inflation for this year has been subsequently and consequently revised lower from 3.7%, which was projected in June, to 3.1% in August, and now to 2.6%. So headline inflation for Q4 this year and Q1 next year have been revised downwards and are broadly aligned with the target. The governor also mentioned the implementation of several growth-inducing structural reforms, many of which were announced by the Honorable Prime Minister on 15th of August, including the streamlining of GST, are expected to offset some of the adverse effects of the external headwinds. Also, the RBI Governor said that inflation was likely to be softer, seen at 2.6% for financial year 26, and GDP growth outlook was projected at 6.8%. And the governor also mentioned about India's external sector, which continues to be resilient. And he also said the tariffs will moderate exports. And speaking about the additional measures, the governor said that we will be strengthening and resilience of the banking sector, and many more policies to further ease in doing business. He also spoke about the FEMA regulations, and RBI governor also mentioned about a few consumer-centric proposals. He also said that despite external environment, a stable rate environment back home, combined with festive sentiment, GST relief, and India's strong economic fundamentals will ensure that real estate also enters 2026 on a firm growth trajectory and move towards Viksit Bharat till 2047. And for more, we have Shishir Sheller joining us on this. Well, Shishir, we just heard the RBI governor highlight a shifting domestic and global economic narrative. What's the mood in Mumbai's financial district following the second consecutive pause by the RBI, much on the expected lines?
Well, absolutely. Looking at this decisions here, RBI have actually stated few points here. First of all, the headline inflation, basically RBI is actually quite focused on. The RBI governor said that the headline inflation is under control as far as the medium-term target of the RBI is concerned. Second important aspect is domestic condition at this point in time. The good and favorable domestic conditions have actually encouraged RBI to unchange its rates here. Although, because looking at this condition and the way the government have taken some proactive steps as far as GST, at the same time, to give boost to the domestic market, some of the bankers and experts were expecting it, but RBI have stated that they're quietly cautious at this point in time, looking at the external condition as well. And that's the reason, even though the domestic conditions looks quite favorable, the inflation is under control. The GDP numbers are quite good here. The RBI has taken the steps to unchange the policy rate for this quarter. Obviously, going forward, the RBI also mentioned that they're closely watching the geopolitical situation and the external factors also. And that's the reason probably this is the right time to take a very cautious move going ahead. Well, at the same time, what we've seen here that the RBI also mentioned that particularly in the entire year, we have seen here that RBI has actually cut the repo rate to 100 basis points. But the last two stands, the RBI has kept the repo rate unchanged looking at these conditions here. Obviously now, the RBI will definitely look forward that how the export sector of the country is panning out in next few months. That is also one of the important aspects to look after. And the second important aspect is, of course, the inflation numbers. Although we have seen that the inflation is under control, but due to the Kharif season, now we'll see, we'll start yielding results. How it's pan out, that also RBI will look after quite closely.
All right, Shishir, also this unanimous decision, as we are talking about holding the repo rate at 5.5%, how are the markets reacting right now? Is there a sense of stability, or are investors still anxious about the global uncertainties, though the stock market opened in green ahead of the policy?
Well, absolutely. This move is actually anticipated by the market here, and that's the reason we have not seen any knee-jerk development in the market. Some of the RBI, some of the banking sectors also, and the market experts expecting this move that RBI probably will take a cautious step. Though going forward, most of them that expect that RBI will take a favorable decision as far as rate cut is concerned, but not necessarily that it should require time. That's what the most experts were saying. And that's the reason even the market right now has not given any major reaction on it, and probably have already predicted this kind of decision by the market here.
All right. Thank you so much, Shishir, for all those details. And still to come on DD India NewsHour. Zelensky warns of critical risk at Russian-held Zaporizhzhia nuclear plant as power lines remain down. Trump signs executive order to use AI in cancer research. And UNSC expands Haiti mission into gang suppression force amid deepening crisis.
This week on Defence Dynamics, from the rails of India's heartland, Agni Prime raises, carrying a nuclear edge on the move. As the nation strengthens its shield with Anant Shastra QR SAM regiments, a new layer of defence takes shape. With the Kaveri D1 engine igniting India's aerospace dreams, the future of power is truly homegrown. This Wednesday at 8 p.m. only on DD India.
Welcome back. You're watching DD India News. I'm Lipakshi Kuran. And moving on, at least 69 people have been killed, 150 injured after a powerful 6.9 magnitude earthquake in the Philippines, marking one of the country's most devastating disasters this year. Now, the earthquake that struck off the coast of Cebu City in the Philippines' central Visayas region led to power outages and damaged buildings in the region. Earthquake monitoring agencies had pegged the depth of the quake at around 10 kilometers and recorded multiple aftershocks, the strongest having a magnitude of 6. Another monitoring agency said there was no tsunami threat following the quake. Search and rescue operation underway amid power outages and damaged buildings. The Philippines lies in the Pacific Ring of Fire, where volcanic activity and earthquakes are very common. And the Zaporizhzhia nuclear power plant in Ukraine has now been without off-site power for 6 days. Now, with the situation getting critical, UN Atomic Watchdog's chief Rafael Grossi has said that the agency is engaging with both sides of the military conflict to restore off-site power to power plant as soon as possible. And the IAEA said the external power lines supplying the plant came down last week for the 10th time in the conflict, and emergency diesel generators were brought into service. Now, the lines supply electricity vital to cooling its reactors, fuel, and preventing a meltdown. Also, Europe's largest nuclear power plant with 6 reactors has been under Russian control since the early weeks of the conflict, and each side has repeatedly accused the other of shelling it and jeopardizing nuclear safety. Meanwhile, Ukrainian President Volodymyr Zelensky has expressed alarm over the situation, saying that Russian shelling is preventing restoration of the power line. Speaking in his nightly video address, he said one of the diesel generators providing emergency power was no longer working 7 days after external power lines went down.
Вже 7-й день і раніше, до речі.
For the 7th day and previously, this had not happened. There is an emergency situation at the Zaporizhzhia nuclear power plant. The situation is critical. Due to Russian shelling, the plant is disconnected from the power grid and is being supplied electricity by diesel generators. This is extraordinary. The generators and the plant were never designed to operate in this mode for so long. And we already have information that one of the generators has failed.
Вже у нас є інформація, що один з генераторів.
Well, the European Union leaders will discuss proposals for a drone wall to protect the continent at a summit on Wednesday in Copenhagen. Now, this comes just days after airspace intrusions by unidentified unmanned aircraft forced a temporary closure of the Danish airports. The summit will also be the first opportunity for leaders of the EU's 27 countries to debate a proposal to use Russian assets frozen in Europe to fund a loan of 140 billion euros to Ukraine. France, Germany, Sweden, Norway, the Netherlands, Britain, Finland and Ukraine have committed troops and anti-drone systems to help Denmark protect the leaders. Now, many of them have accused Russia of brazen violations of European airspace with recent incursions by drones over Poland and fighter jets over Estonia. Russia has, however, denied responsibility for the drones over Denmark. And Romania hopes to quickly set up production on its territory of defensive drones with Ukraine for domestic use as well as by European Union and NATO allies. Foreign Minister Oano Toai said in an interview that talks with Ukraine began before a spate of airspace incursions that the region has blamed on Russia in recent weeks. Now, Romania, which borders Ukraine, hosts a number of U.S. troops and plans to invest over $2.9 billion into its Mihail Koganice Air Base in the coming years, expanding its capacity to accommodate 10,000 Romanian and allied troops. Also, the United Nations Security Council has voted to expand an international security force deployed to Haiti and transform it into a so-called gang suppression force. Now, the resolution passed by the Council on Tuesday provides a clear mandate for the force to work with local authorities to neutralize, isolate and deter the gangs. Now, it would raise the personnel ceiling from 2,500 in the current mission, first approved in 2023, to 5,550 personnel. Also, Russia, China and Pakistan abstained from the vote on the measure, but forward by the United States and Panama. The remaining 13 council members voted in favour. The new force will still rely on voluntary contributions of personnel and funding, but the leadership structure will be different. It will be led by a group of representatives from countries that have contributed personnel, plus US and Canada. The force will also be supported by a new UN field office. The resolution also requests that the UN Secretary General establish a UN support office in Haiti to provide increased logistical support amid overlapping security, humanitarian and political crises as well. And President Donald Trump also signed an executive order to promote the use of artificial intelligence in child cancer research. Now, the U.S. Health Department announced a doubling of funding for its Childhood Cancer Data Initiative. The executive order will bolster the use of artificial intelligence and provide an additional $50 million in research grants aimed at finding cures for childhood cancers. The order builds on the National Cancer Institute's Childhood Cancer Data Initiative, a 10-year, $500 million program announced by Trump during his 2019 State of the Union address, focused on gathering and sharing data on childhood cancers. Well, you're watching TD India NewsHour. Time now for some sports news. India kicked off their Women's World Cup campaign in an emphatic fashion, defeating Sri Lanka in a rain-curtailed opening encounter in Guwahati on Tuesday. Put into bat first, India lost early wickets but managed to put 269 runs on the board after the match was reduced to 47 overs due to rain. Now, the host lost 4 wickets for 4 runs in the space of 11 balls, including 3 in the 26th over, which saw them slip to 124 for 6. But Amanjot Kaur and Deepti Sharma produced a match-winning partnership of 103 for the 7th wicket that saw Sri Lanka's target revised to 271 from the same amount of overs. They made a promising start but halted by brilliant bowling performance by Deepti Sharma and Sneha Rana, which saw them bundled out for 211 runs. And India's star para-javelin thrower Sumit Antal added another golden chapter to his career at the ongoing 2025 World Para-Athletic Championship in New Delhi on Tuesday. Antal clinched the gold medal in the men's F64 javelin throw with a record-breaking performance. Already the world record holder at 73.29 meters, Sumit threw 71.37 meter in his 5th attempt, a mark that not only sealed his 3rd world title but also eclipsed his own championship record of 70.83 meters set in Paris in 2023. Also, India's Pardeep Kumar, competing in the same event, finished 5th. And India's Vinay Pratap Singh Chandravat clinched the bronze medal in the trap event at the ISSF Junior World Cup in Delhi. In an exclusive conversation with DD India correspondent Narayan Singh, he said that the competition at the Junior World Cup was highly challenging and he's now aiming to secure medals at senior level events.
Another fantastic performance by the Indian shooter at the, we can say that the international level, and right now I am joined by Vinay Chandrawat, who won bronze in the shotgun event. Vinay, congratulations for winning a bronze medal. So the competition was quite stiff. It was neck and neck. We saw that the competition was going, even from the Spain and the Croatia, the way they were fighting.
From India also.
So how you look the level of competition here?
It's very tough here in these conditions. Earlier it was so raining badly, and I can't believe I have hit 25 and in this day 48 total and in final. So it is very good feeling for me and proud moment for my nation.
Take a look at the Indian shooting journey this year too. In the Asian Championship in China, we won 99 medals. Here too we are leading the medal table. So how overall you look the performance of the Indian shooter at the various international events?
Yeah, this is increasing day by day in the rifle and pistol events, but not that good in shotgun. But now in skeet we have won 2 medals, silver and bronze, and in now trap also. So and tomorrow's mixed team will see more medals over there.
You have been here at the international level, the Junior World Cup. So what was the learning curve for you here? What you learned, especially the level of competition was very tough?
I've learned a lot of things, how to handle pressure and how to focus on the targets. I can't just believe that happened today. So it was so a proud moment for me and my nation.
So what's the next target after winning a medal at the junior level, Junior World Cup? So what are you eyeing next?
Now the next my target is national and trials. Then again World Cups and World Championship for the next year.
So definitely Vinay here targeting the senior level competition and also the World Cup and the World Championship, the way he performed here, hoping that definitely he will turn the color of the medal in the upcoming events. With camera person Vishwabandhu, Narayan Singh, DD India, Delhi.
And world number one, Carlos Alcaraz clinched the Japan Open wearing down Taylor Fritz in the final on Tuesday to win his 8th title of a spectacular year and further cement his status as a dominant force in the men's game. Victory also earned Alcaraz revenge for a stunning loss to Fritz at the Laver Cup team event in San Francisco this month. The 22-year-old had endured a scare after jarring his foot on his Tokyo debut last week, but was beaming as he celebrated his 67th match win this season and 24th tour-level title overall. And Kylian Mbappe scored a hat-trick as Real Madrid cruised to a 5-0 victory over Champions League debutants Khairat Almaty in on Tuesday, fresh from a 5-2 loss to Atletico Madrid in La Liga. Xabi Alonso's side responded empathetically in Kazakhstan with Mbappe leading the charge. The French forward opened the scoring in the 25th minute and completed his hat-trick in the 73rd minute. Real's dominant display leaves it in a strong position in the standings, while Khairat, still seeking its first Champions League point, was left to rue defensive lapses on a challenging night. And today marks Maha Navami, the 9th day of Navratri, celebrated with devotion across the country, while devotees offer prayers to Goddess Durga in a fierce form, seeking strength and protection, while special rituals and Kanya Pujan ceremonies are held in households and temples. On the occasion of Maha Navami, with the morning Aarti performed at Chandiwala Temple, Delhi, devotees worship Maha Siddhidatri, the 9th form of Goddess Durga. She is revered as the giver of supernatural powers and blessings, seated on a lotus and holding a mace, discus, conch and lotus in her 4 hands. It is believed that by worshipping Maha Siddhidatri, one attains wisdom, strength and success as she fulfills all divine aspirations of her devotees. Visakhapatnam in Andhra Pradesh witnessed a grand display of devotion as goddess Kanyaka Parmeshwari was adorned with 5 crore rupees in currency notes, 7 kilograms of gold and 12 kilograms of silver. Temple authorities including Babu Rao and Vamsi Krishna oversaw the decorations, drawing devotees and visitors eager to witness the spectacular offering during the festival. Katra's Mata Vaishno Devi Temple witnessed serene celebrations on day 9 of Shardiya Navratri, coinciding with Ram Navami. Devotees appreciated the beautiful decorations, enhanced arrangements and a peaceful darshan, offering prayers for peace, prosperity and harmony across the country. Thiruvananthapuram celebrates Navratri with 7,400 Golu dolls that Shakti Krupa collector Kudur Virasi has been collecting these dolls from past 10 years and dedicates most of his home to display antique and themed dolls, delighting visitors with his unique collections. Virasai aspires to include all 330 million deities in his collection and sources dolls from various manufacturing locations across Tamil Nadu. All right, that's all for this edition of DD India NewsHour, but let us know your thoughts on the news of the day. For those on the go, you can get all the latest news and updates from India and across the world on the DD India mobile app. The app is available on both Android and iOS platforms. Scan the QR code on the screen to download now. Well, we'll be back with more news as it breaks here on DD India. I'm Lupakshi Khurana from all of us here in Delhi. Thanks for watching DD India NewsHour.